Do you understand the differences between subleasing, co-hosting, and buying real estate? Well, I'm going to break it down in this video, and by the end of this video, you're going to know exactly which strategy you should start with. Before we do, make sure you guys hit that subscribe button and turn on the notification bell, and let's jump right in. Let's first break down purchasing, because at the end of the day, this is going to have the most amount of impact in your life. This is where you create long-term wealth. This strategy allows you to monetize the 5 main benefits of owning real estate. You have your cash flow. This is your monthly profit after all expenses. Appreciation. This is the increase in value over time. Depreciation, which allows you to write off the physical building, which all it means is you can make some or all of your cash flow tax-free. Mortgage paid down, other people paying down your mortgage. And then you have tax benefits. You see, you get a lot of tax benefits when you have a business, and even more tax benefits when you own real estate on top of the business. And owning real estate is always going to be, and should be in my experience, the long-term goal for all of you, as it's been for me and my students. The challenges with owning real estate and buying real estate is that it is very capital intensive, meaning it's going to require a lot of money, a lot of dinero. And most people that start Airbnbs with the purchasing strategy can only buy one because it's a lot of capital, especially if they're putting 20% down on a $600,000 property, $120,000 just in a down payment. Call it another 20 grand in closing costs, you're at 140. Let's say you need to make a little bit of renovations, another 20, now you're at 160. And say you want to put all the furniture, like you're talking almost $200,000 to get one property. Now again, in the end, is it going to be worth it? Absolutely. But it is very capital intensive. Now let's break down arbitrage, right? The benefits, the pros of arbitrage is there's no down payments and no closing costs. With those same $200,000, I can launch 10 Airbnbs. I have properties that I own and sublease literally like a few miles away from each other. And they make the same amount of money. In fact, sometimes my subleases make more money in profit on a monthly basis than the ones I own. And it's not because I'm subleasing it. It just happened to be a slightly better property, or actually I had this one before the one that I bought, maybe because of the reviews, but they're very similar layout, similar bedrooms, bathrooms, square footage, amenities, location, all that. So in short, the properties that I sublease versus the ones that I own make the same amount of money. And my goal is always to make $2,000 a month in profit. And I have properties that make all the way upwards of $5,000 a month in profit, and even up to $10,000 a month in profit on the peak months. That said, with those $200,000, I could launch 10 Airbnbs for $20,000 each. And if I have 10 Airbnbs making $2,000 a month, that's $20,000 a month in profit. So would you rather own one and make $2,000, or would you rather arbitrage 10 and make $20,000? This is why arbitrage makes so much sense. Economies of scale. You can make your capital go further on the front end. So in the front end, the goal should be cash flow, right? Making the most amount of monthly profit so you can replace your 9 to 5 or supplement your income and travel more, put your kids through homeschooling or whatever you want to do. So subleasing is going to take you further, and you can accomplish so much more in the front end. There's this one property that I have. When I started subleasing it back in 2019, it was worth about $400,000. 4 years later, in 2023, that same property is worth probably close to $650,000. You're talking a $250,000 of appreciation, of increase in equity. Guess what? I didn't get any of that. Had I bought that property, I'd be $250,000 richer in net worth. Cost segregation, aka bonus depreciation, aka code section 179 of the tax code, allows you to write off and accelerate the depreciation. So rather than waiting 27.5 years, which is the standard process, you can accelerate that depreciation. If you bought a property, an investment property as a short-term rental, and you bought this for $600,000, a third of that is about $200,000. You can depreciate that $200,000 in year one, which would normally save you about $100,000 in taxes today. Buying that one property for $600,000 today would save you $80,000 in taxes on your federal tax return. And if you live in a state where you have zero state taxes like Florida or Texas or Nevada, and you made $80,000 of net profit, you would basically pay $0 in taxes. So that's one of the main benefits of ownership that you don't get in subleasing. You don't get the equity, you don't get the appreciation, you don't get the mortgage paid down, you don't get the cost segregation, you don't get any of that equity. Subleasing, best for cash flow, but not the best for long-term wealth. So you got to pick your battles. And then you have co-hosting on the back end. This is where you manage other people's Airbnb. So let's say there's people who you know who are buying and some who are subleasing. And you manage the Airbnbs of people who are subleasing, who are buying the real estate. And you get a percentage of all the revenue. Let's talk about the pros first of all. The pros with co-hosting is you don't require any money out of pocket. I'm talking $0 out of pocket because it's not your property. You own the co-hosting business. You own the management side. You don't need to put any money into the deals. You are offering a management service. And let's say you charge 20% of the gross revenue. Maybe you manage for a person who is subleasing and you're managing for another person who is buying. And let's say each of those properties are making 10K, you charge 20%, you're making 2,000 from the person who you're managing their sublease, and you're making another 2,000 from the other person. Now you're making 4,000 a month with $0 out of pocket because you are offering a management service. Now, what are you responsible for when you are offering this service? Well, you are overseeing the cleaning, the maintenance, and the communications. You can do the communications yourself. You do that all virtual from your phone wherever you are in the world. You have somebody local within 5 to 15 minute drive from the property that can do all the cleaning, and someone else that does the maintenance whenever needed, and then boom, you're working on the business, not in the business. The downside of co-hosting is you're making 2,000 while the owner's making 8,000. So if you own that property or you sublease that property yourself, you can make twice as much from the same property. But it would have required you to invest, $20,000 for an arbitrage or, over 6 figures for a purchase, right? So you got to outweigh your pros and cons. And this is how I would decide, right? Because here's the thing. If you have $0 dinero out of pocket, but you have a 700 credit score or more, you can get business funding, potentially. I don't know your situation or your, credit utilization, but assuming you're in a good situation from a credit perspective, you may be able to get business funding at 0% interest and use that money to get a sublease and then use the profits from the Airbnb to pay off the sublease. Even with zero money out of pocket, you could definitely sublease a property. But if you wanted to take the safer approach and be more conservative, you can definitely start your business with co-hosting and then work your way up to subleasing and then work your way up to purchasing. As of today, 2023, I do all three. I got properties that I own. I own 50% of my portfolio. And then the other 50% is mainly subleasing and less on the co-hosting. So I get to implement the best of both worlds. That being said, guys, I hope you guys enjoyed this video. Let me know what the biggest takeaway was. What did you like about subleasing versus purchasing versus co-hosting? I'd love to hear your comments down below. Don't leave without leaving a comment, please. Check out the links in the description. Check out one of my other videos here. Don't forget to leave your comments and like this video, and I'll see you guys on the next one. Peace.